Hi guys, I hope you're doing well. My name is Colin and this is Colin Talks Crypto. One of the most popular questions is how to take profits during this upcoming Bitcoin bull run. And I'm going to lay out for you in a fair amount of detail how I personally am going to take profits this upcoming bull run. Thank you for joining me. I estimate that we have approximately 3 months left in this bull run. I think that will end around December or January 2022. Now I could be off, but that doesn't matter because I'm going to be using the Colin Talks Crypto Bitcoin Bull Run Index when I take my profits. It's not time-based. It's not price-based. It simply indicates when we are at the top. So it doesn't really matter. It will indicate it when we get there. So whether it's January, whether it's December, I don't have to worry about timing. I just have to keep my eye on the CBBI score. So I'm going to lay out for you, with as much detail as possible, my personal envisioned cash out plan. This is subject to change, and obviously this is not financial advice. But nonetheless, this is my current plan as I have it formulated for how I am going to take profits during this Bitcoin bull run. And this includes taking profits on altcoins, which is probably the number one question I get is, can you make a CBBI for Ethereum, or insert your coin here, Cardano, Polkadot, Bitcoin Cash, Litecoin, you name it. People want a reliable price index for these other coins. Now there's a variety of reasons why I can't just go whipping out indexes for all these different cryptocurrencies. It's not quite that simple. And to just give you a couple of brief reasons why, Bitcoin has 12 years of history. That means 12 years of metrics and historical data. Not all other blockchains are that mature in terms of their metrics, their charts, their analysis, let alone their time span of being around. They just don't have the longevity. Secondly, Bitcoin has the largest market cap. Therefore, it moves the other cryptocurrencies. All these other cryptocurrencies are basically pegged in some degree to Bitcoin because Bitcoin has the biggest market cap and it has the most interest. So I can't go creating an index for Ethereum when the Bitcoin price is going to move the Ethereum price. It doesn't make sense. However, I am going to show you in this video how I'm going to use the CBBI to take profits on the various altcoins because, like I said, it is essentially the number one question I get asked about the CBBI. Can you make it for this other coin? So those are just some of the reasons why I can't just go creating CBBIs for every coin in existence because it wouldn't be reliable even if I did. Now someday if Ethereum or some other cryptocurrency becomes the dominant player and every other cryptocurrency is linked to it and it has the most market cap and the most daily volume and the most users and the most global interest, then that will become the new peg. That will become the new cryptocurrency. And at that point, I would absolutely consider creating a bull run index for whatever that coin may be. But for now, Bitcoin is the big daddy, and that is what we will be using and why. All right, so that's a bit of an intro. So here's the cash out plan. I'll try to make it as simple as possible. So I'm going to start taking profits when the CBBI reaches around 90. That's my personal guess, from 90 to 100. It's worth noting that the CBBI may not reach 100, so I don't want to wait until too late to take profits. That was the big mistake I made last bull run, not taking any profits, seeing my portfolio drop to 1/10 of its value. And that's exactly what this cash out plan is attempting to solve. Now I want to clarify that we're not attempting to cash out into dollars just for the sake of holding dollars. I'm attempting to cash out into whatever stores value, whether it's fiat, gold, stable coins, whatever it is, that holds purchasing power better than Bitcoin does during a sharp bear market correction. That's the pure and simple goal. And for the purpose of buying more crypto. It's not to hold dirty fiat. It's not to hold stable tokens. It's to buy more crypto than we started out with. Because some people seem to have a hard time wrapping their heads around why would you cash out? Cashing out is a way of preserving wealth. It's not a way of getting into an inferior currency. It's a way to temporarily hedge your losses so that you don't lose, so that you can buy more. And that is what we are doing with the CBBI and profit taking. So my goal, I want to triple my cryptocurrency holdings by the next bear market bottom in about 2 or 3 years from now. That is my personal goal. If you want to, be my guest and just hold all the way through it. I've done it before. I don't personally recommend it, and I created the CBBI out of the pain I endured by having my portfolio drop to 1/10 of its size in the 2017 to 2018 or 19 bear market correction. So as dirty as fiat is, it sometimes is a better store of value than Bitcoin in a bear market situation, especially one that occurs rapidly and sharply, like after a blow-off top for a Bitcoin bull run. So what I'm going to do is I'm going to watch the CBBI, because again, I don't know exactly when the price peak is going to occur and I don't exactly know what price it will be, but I feel confident that a series of metrics averaged into a score, like we have on the CBBI, has a better chance of being right than I do of guessing. And that's the best way I can put it. Neither method is perfect. Go ahead and guess if you want. But I think the CBBI has a better chance of being right than I do of guessing. So I'm going to go with odds. Investing is about odds. You're never 100% in any investment, but I want to have as high of odds as I can possibly get. So here's what happens. CBBI goes to 85. It goes to 87. I make sure I have all my ducks in a row. I make sure I have all my exchanges linked to all my bank accounts. I have as many bank accounts and exchanges ready as I feel I need to diversify my funds into. This is all preparatory. You need that done all in advance. And by the way, if you haven't seen my other cash out plan videos, please do watch them. I have a playlist on my YouTube channel, and if you watch all of those, they will catch you up to speed as far as what I'm going to say in this video. So have all that stuff ready before you get to the 90 on the CBBI. What I'm going to do is when I see the CBBI hit my personal arbitrary score of 90, you can wait till 92, you can wait till 88, you can wait till 85, whatever you wish. I'm going to wait till I see 90. Then I'm going to take between 5 and 10% of my Bitcoin allocation and liquidate it across one or multiple exchanges into fiat. And there's going to be a second stage with that fiat. That's going to go somewhere else, but I'll get to that as stage 2. Okay? The first step is liquidate that into fiat. Now you may want to have a good portion of your Bitcoin or cryptocurrency holdings in exchanges, preferably multiple exchanges, prior to profit taking, because things can get congested. Both exchanges can get overwhelmed and congested, and so can blockchains. And if you don't have some of your crypto on those exchanges already, you could be caught with waiting for 6 confirmations with Bitcoin, taking hours because the exchange is being slow and the blockchain was slow, and then missing an opportunity. So you don't want that to happen. I recommend having some portion across multiple exchanges for redundancy and security and protection, but at the same time, ease of access and convenience. Normally, I do not recommend having any cryptocurrency on exchanges, but during the brief weeks for a bull run peak and profit taking, I think that that is a smart move. And as I've covered in a previous video, the duration for profit taking historically has been only about 22 or 23 days when the CBBI has been between 90 and 100. So it's not a very long period of time. That's about 3 weeks. And if you're just taking profits on the way up, that's about 11 days. So it's not like you have to keep your cryptocurrency on exchanges for very long. We're talking a couple of weeks at most. Again, that's what I'm doing. I know that I'm taking the risk of having some of my crypto on exchanges for that convenience factor. But I didn't wait 4 years to miss out, so it's a trade-off I'm willing to make. So when I see the CBBI hit 90, I liquidate 5 or 10% of that on various exchanges. Now, that money goes into different places. It's going to go a third into gold in vaults, physical gold, but stored in Brink's vaults for easy access and liquidity, because you can buy gold and sell it back to your bank account if it's stored in Brink's vaults very quickly. It's much more liquid than trying to deal with physical assets. I would not recommend that. I've had very bad experiences with receiving delivery of physical precious metals. It's ridiculously time consuming and it won't work for our strategy here. So I'm going to personally take 1/3 of everything I sell and put that into gold. Now I want to tell you a few things I've learned about gold, and I want to recommend a place I've used in the past to buy it. It's goldsilver.com. Please use my link in the description below and the affiliate code. Goldsilver.com was created by Michael Maloney, the creator of the Hidden Secrets of Money YouTube series. I have personally purchased precious metals from goldsilver.com, and from my own experience, I feel that this is a trustworthy source. Make sure you do your own due diligence as well, and as always. One of the great things about goldsilver.com is that it allows you to purchase gold or precious metals with Bitcoin and cryptocurrency directly without first converting that cryptocurrency to fiat. Another thing that I really like about goldsilver.com is that once you purchase precious metals, it allows you to store them in a Brink's vault or take physical custody. For our purposes, Brink's vaults works best. It may take some number of weeks for your precious metals to arrive in the vault, but that's okay for the strategy that we're using, because we are going to be waiting for between 1 to 2 years for the next crypto bear market before we rebuy in back into cryptocurrency. Once you have gold or silver in the Brinks Vaults system, goldsilver.com allows you to sell that gold or silver instantly and have that cash deposited into your bank account, possibly as quickly as a few business days. This makes it a highly liquid solution for preserving purchasing power, while the Bitcoin and cryptocurrency bear markets lose enormous amounts of value during the sharp and sudden bear market following a blow-off top. It's worth noting that there are monthly storage fees, but if you use the commingled storage option with Brinks Vaults, that monthly fee is a much smaller percentage than if you use segregated storage. Personally, I'm going to be using commingled storage because I don't care what specific bars or coins I own. This is because it is not my intention to hold the physical metal in the long run. It's to purchase more Bitcoin and more cryptocurrency. Another factor to be aware of is the bullion premium, and this, in my opinion, is the one major drawback of buying gold and silver through a website like this. You end up having to pay sometimes a very exorbitant premium, which is basically additional price on top of the spot price when buying precious metals. So just be aware of this and factor this in and decide for yourself whether you decide this is a worthwhile purchase or not. But even with the bullion premium, I think it is worthwhile, personally speaking, to have some money, some wealth, some purchasing power preserved in gold, especially given the extremely high inflation levels that we are seeing in the world today. Gold gives a diversification away from fiat and stable coins and allows us to potentially retain more purchasing power or even make further gains on the gold itself. I think it would be pretty amazing if a percentage that I cash out with put into gold during that sharp bear market decline for cryptocurrency ends up becoming worth more than it was at the peak. Then when the next bear market rolls around, I can purchase even more cryptocurrency than had I even bought it directly with the money stored in stablecoins or fiat. So there you have it. I just wanted to make that clarification and education on the subject of buying gold directly with cryptocurrency. I'm going to be using goldsilver.com. Please use the link in the description below if you also decide to purchase gold or silver with your cryptocurrency to protect and safeguard its value at the height of the Bitcoin and cryptocurrency bull run. Now, I'm not just going to put it all into physical gold. I'm going to take half of that third and put that into physical gold stored in vaults. I'm going to take the other half of that third and put it into PAXG, a gold stable token. And that way I have half of my third in physical gold and half of my third in a stable token, which again is very liquid. And I've done some research and I personally feel that PAXG is one of the better gold stable tokens out there. If you know of any better ones, let me know. I want to make sure I have the best one possible. So I'll be using those two off-ramps for securing the purchasing power of my cryptocurrency. That's 1/3 of my total cryptocurrency. So every time I liquidate cryptocurrency, be it Bitcoin or an altcoin, I'm taking 33% of it, and half of that's going to physical gold and half of that's going to a stable tokenized gold format. Okay, so that leaves 66%. So what do we do with the remainder of that 66%? 1/3 of that is going to stay as fiat, as dollars, and I will spread that across multiple bank accounts and multiple exchanges as I deem appropriate for the size that I'm cashing out. I basically ask myself, if I lost this amount, would this devastate me, and how upset would I be? And how much would I need to split this up? How many bank accounts do I need to split this amongst so that I feel secure if any one of them goes under or freezes my accounts or denies me access? And so that's my yardstick for distribution. It's how much do I feel I need to distribute it so that I feel safe if any one of those goes under. And hopefully none of them do, but that's my security measure for myself. So I may have 2 bank accounts and 3 exchanges, and so 1/3 of everything I cash out gets distributed amongst those. And so I'll keep a little bit on the exchange and I'll send some to some bank accounts. That's the other 1/3. So now we have 1/3 goes to gold in 2 places, 1/3 goes to cash in X number of bank accounts and exchanges, and that leaves the last 1/3. So where's the last third of every Bitcoin and cryptocurrency sell that I make going to go? That's going to go into stable tokens. And my favorite stable tokens right now, hands down, first place goes to UST, the Terra stable token pegged to the dollar. That is the #1 place I'm going to be putting it as far as stable tokens go, but I will probably also split some up and put some into DAI. I probably won't use other stable tokens unless a really good one comes across my plate. There's just too many centralized options out there. And the thing I like about the Terra dollar, the UST, is that it is a true decentralized algorithmic stable token. There are very few of these out there, and there are very few of these out there that have enough liquidity behind them to remain stable in the times of high volatility. So that's why I'll be using UST for probably half of every third that I liquidate, and I'll use DAI for the other half of every third that I liquidate. I understand that DAI is somewhat centralized, but it's better than Tether, it's better than USDC. I know that it has USDC as part of it, but it's the best choice we got out there, and I don't want to have all my eggs in one basket. So how does this work? We hit 90 on the CBBI, and I take 5 or 10% and I cash it out into those allocations that I just mentioned. We go to 91, I do another 5 or 10%, cash it out into those exact allocations. We hit 92, again, another 5 or 10%. And the reason I say 5 or 10% is because I'm going to leave it up to my best judgment. And I continue taking profits every increment that the CBBI increases on the way up to 100. Now, I hope that it hits 100, but there's a chance it won't. This is untested. This is uncharted territory here. And also, I want to let you know that I don't intend to sell all my crypto, because there's a chance that I could be wrong. What if Bitcoin just goes to 500,000 and the CBBI is erroneously at 100 when Bitcoin's at $250,000, not realizing that we have maybe it's a black swan event that pumps the price even higher. Anything could happen, and I want to be ready for that. So my personal cash out plan includes not selling at the extreme more than 70% of my entire cryptocurrency holdings. But I'm also going to break that down into specific amounts for each cryptocurrency. And I've already decided these ahead of time. I'm not going to sell more than 50% of my Bitcoin. I'm not going to keep more than 33% of my Ethereum. That means that 66% of my Ethereum is being sold this bull run. I'm not going to keep more than 25% of my Luna. I'm going to be selling 75% of my Luna this bull run. I'm going to be selling 100% of my EOS and all my other smaller holdings that I have, ERC20 tokens, Strong token, Box token, DApp, all these other tokens, I'm going to be selling 100% of. Okay, so the reason I just gave you all those percentages of how much I'm going to sell and how much I'm going to keep is based on bear market drops. Historically, Bitcoin drops 85% in a bear market. Now, I don't think that that's going to continue to be the case forever. In fact, I think that that will become less and less every bull run, and that could include this cycle. But I don't think we're going to get away with any less than a 70% drop in the Bitcoin price. I think that we are still going to see at least a 70% drop in the Bitcoin price, probably as high as 80%, honestly. But when it comes to other cryptocurrencies, basically the amount of their drop is proportionate inversely to their market cap. So the lower the market cap, the bigger the devastation is for these other cryptocurrencies on the way down in a bear market crash. And again, I think that that's because of their strong correlation to the Bitcoin price, because they're highly linked with all these trading pairs across all these exchanges, and that's where they get the predominance of their liquidity. It's very often from Bitcoin. So when Bitcoin crashes, they crash even harder because they have less liquidity. They have more volatility. And that's always been the case. Altcoins have always been highly volatile compared to Bitcoin. Bitcoin is already volatile compared with traditional assets, but altcoins take Bitcoin's volatility and make it look wimpy. So the lower the market cap of the altcoin, the more I expect it to crash during the bear market. And that's why I'm not holding any mid-cap or lower cap altcoins. None. I'm not holding a single one because I know they will get decimated. And why would I want to watch my portfolio get decimated? I'm only willing to hold the strongest coins. That's Bitcoin, a little bit of Ethereum, and a tiny bit of Luna. And those are the only ones I'll walk away with. The rest, I'm happy to buy more when it comes time to reaccumulate during the bear market bottom in the next 1 to 2 years. I have to be patient. And again, I'm going to use the CBBI on the way down. And when CBBI goes below 15 or so, I'm going to start reaccumulating and buying my favorite cryptocurrencies at that time. And who knows what they'll be. Maybe it'll be Ethereum still, most likely. Maybe it'll be Luna. But I don't know if it'll be Bitcoin Cash, Litecoin, EOS, Cardano. I have a feeling a lot of those positions are going to change on CoinMarketCap. And very likely there will be some new superior contenders, some new very promising projects that will likely go to the moon in that next Bitcoin bull run. And so I want to be ready to accumulate those. So guys, I hope you found this useful. That is my strategy. I'll be selling in laddered steps on the way up to 100 of CBBI, but I won't be selling more than 70% of my entire cryptocurrency portfolio. I'll be holding Bitcoin, Ethereum, and some Luna throughout the bear market, but selling the vast predominance of my cryptocurrency, including all my altcoins. And one final very important factor that I talked about at the very start of this video is, when do you take the profits with the altcoins? I'm not going to take them at the same time as Bitcoin. And I'll put a chart on the screen here to show you why. Because there is a delay. Historically, there's been a delay when altcoins peak versus when Bitcoins peak. Back in 2017, I remember that Ripple and Ethereum, the two largest altcoins at the time, had a 2-week delay between the time Bitcoin peaked in mid-December and when they peaked in the beginning of January. This chart shows you that there's an average of about 1 month delay of altcoins peaking versus Bitcoin price peak. So why would I take profits of my altcoins when Bitcoin is peaking out, knowing that they're not at their top? I'm not going to do that. So I'm going to wait between 2 and 8 weeks. That's up to 2 months to sell profits on my altcoins. To be honest, I probably don't have the mental fortitude to wait a full 2 months after the Bitcoin peak. So I'll probably be taking profits about 2 to 4 weeks after I see Bitcoin price peaks being reached for my altcoins. And again, my theory is, the larger the market cap, the closer to Bitcoin that the altcoin will peak. So for example, Ethereum will probably peak soonest after Bitcoin. And then something down the line like Bitcoin Cash might peak a little bit further down the line, maybe 4 weeks instead of 2 weeks for Ethereum. And then something further down the line like EOS might peak 4 to 8 weeks after Bitcoin peaks, because the market cap is less. And I'm just noticing a correlation between the delay of peak and how low the market cap is. Again, it's an inverse correlation. So that's the timing strategy that you've all been asking me so much about. Everybody wants to know when to take profits on their favorite altcoin. So I am using the CBBI to roughly time my exit strategy with these altcoins. It's based on the Bitcoin peak with X amount of delay. And that X amount of delay is related to the market cap of the coin. So if it's in the top 10, it'll probably be within the first 2 to 4 weeks after Bitcoin peaks. If it's the 10th to the 50th cryptocurrency on CoinMarketCap, it'll probably be between 4 and 8 weeks. And that's just my guess, and that's what I'm going to go with. So there you have it, guys. That's my complete cash out plan, where the money's going, at what stages to take the profits, how much to hold through the bear market, and how I'm taking profits with altcoins as well. I hope you enjoyed this. If you did, please share it. Please smash the like. Please share CBBI and get that word out to others. And I hope you have a fantastic bull run. So I can't count the number of times I've been asked, can you make a CBBI for Ethereum? It's like people don't watch my videos or something. They don't see that I've answered this like 6,000 times. Okay, so